In a world where the rich seem to get richer, real estate stands out as a beacon of accessible wealth building, even for the average Joe. Imagine a future where you collect rent checks instead of just paychecks, where your investments climb in value while you sleep. This isn't just a pipe dream, it's real estate investing, and it's how many of today's millionaires built their fortunes from the ground up. Real estate investing is not just about buying properties, it's about securing your financial future. Unlike stocks and bonds, real estate offers a tangible asset that historically appreciates over time. The dual income potential through rental yields and property appreciation provides a compelling case for why real estate should be a part of everyone's investment portfolio. Moreover, real estate investments are known for their resilience. Even during economic downturns, while stocks may plummet, real estate often retains value and provides stability. This stability, coupled with the leverage you can utilize in real estate, allows for significant wealth accumulation over time. Finally, real estate offers unique tax advantages. From depreciation to the ability to defer capital gains through mechanisms like the 1031 exchange, the tax benefits alone make real estate a worthy investment. The first step in successful real estate investing is understanding the market. Knowing when and where to invest can make the difference between a profitable venture and a financial flop. Key indicators such as employment rates, population growth, and future development plans should inform your investment decisions. Utilizing tools like MLS listings, real estate websites, and local government resources can provide valuable insights into the viability of potential investments. Additionally, attending seminars and connecting with local investors can offer practical, real-time market knowledge. Remember, a well-informed investor is a successful investor. The more you understand the market dynamics, the better positioned you are to make smart investment choices. Real estate investing encompasses a wide range of options, each with its own risks and rewards. Residential properties, from single-family homes to multi-unit apartments, are the most common and accessible form of real estate investing. These properties can provide steady rental income and potential for significant appreciation. Commercial real estate, including office buildings, retail spaces, and warehouses, offers higher income potential but typically requires more capital and expertise. Real estate investment trusts, REITs on the other hand, allow investors to enter the real estate market through the stock market, offering liquidity and diversification without the need for direct property management. Exploring these options allows you to diversify your investment portfolio and mitigate risks by not putting all your eggs in one basket. Setting your investment goals is crucial before diving into real estate. What are you aiming to achieve? Are you looking for steady cash flow, long-term appreciation, or perhaps a combination of both? By setting clear, measurable, achievable, relevant, and time-bound, SMART goals, you'll guide your investment strategy and maintain focus. For instance, if your goal is to generate immediate cash flow, properties in high-rent, high-demand areas might be ideal. Conversely, if you're focused on long-term appreciation, you might look for emerging markets with growth potential. By defining your objectives early on, you can tailor your investment approach to effectively meet your financial goals. Securing financing is a critical step in real estate investing. Traditional mortgages are the most common and require a down payment and a good credit score. However, other options exist, such as hard money loans for short-term investments or leveraging equity from other properties. It's essential to understand the pros and cons of each financing method. For example, while hard money loans can be quicker to secure, they often come with higher interest rates and shorter repayment periods. Building a strong relationship with a banking institution or a private lender can also provide you with more flexible financing options tailored to your investment strategy. The adage location, location, location holds true in real estate investing. The right property in the wrong location can lead to financial disaster. It's important to consider factors such as the neighborhood, proximity to amenities, and future area developments when selecting a property. Leveraging local expertise by working with experienced real estate agents can provide you with insights into the best areas for investment. Additionally, Attending open houses and viewing multiple properties can help you develop a sense for the market and identify potential bargains. Remember, the goal is to buy low and sell high. Identifying undervalued properties in up-and-coming areas can lead to significant investment returns. The process of buying real estate involves several steps, from making an offer to closing the deal. Understanding each step is crucial to navigate the process smoothly. Key considerations include conducting thorough due diligence, such as property inspections and title searches, to ensure there are no hidden problems. Negotiation is also a critical skill in the buying process. Being prepared to walk away can sometimes lead to better terms. Additionally, understanding the legal aspects such as contract terms and closing procedures can prevent costly mistakes. Engaging a reputable real estate attorney can provide the necessary guidance and ensure that your interests are protected throughout the buying process. Once you've acquired a property, effective management is key to maximizing its value. Deciding whether to manage the property yourself or hire a professional property manager is an important decision. While self-management can save you money on fees, it requires time and knowledge about landlord-tenant laws, maintenance, and tenant relations. Implementing systems for rent collection, routine maintenance, and tenant communications can streamline property management tasks. Technology tools like property management software can also enhance efficiency by automating many of these processes. Remember, good management will not only preserve but can also increase the value of your real estate investment. All investments carry risks, and real estate is no exception. Common risks include unexpected maintenance issues, vacancies, and changes in market conditions. Developing strategies to mitigate these risks is crucial for sustaining your investment. For instance, maintaining a reserve fund can cover unexpected expenses, while thorough tenant screening can minimize vacancies and rental defaults. Additionally, keeping abreast of market trends and economic indicators can help you anticipate and react to changes that could impact your investment. Insurance is also a critical component of risk management in real estate. Ensuring your properties are adequately insured can protect you from financial loss due to disasters, accidents, or lawsuits. Real estate offers several tax advantages that can significantly enhance your investment returns. Understanding these can help you plan your investments more effectively. Common benefits include deductions for mortgage interest, property taxes, operating expenses, and depreciation. Strategically using these tax benefits can reduce your taxable income and increase your cash flow. Additionally, strategies like the 1031 exchange allow you to defer capital gains taxes by reinvesting the proceeds from a real estate sale into another property. Consulting with a tax professional who specializes in real estate can ensure you maximize these benefits while complying with tax laws. As your confidence and experience grow, you may consider scaling your real estate investments. Knowing when and how to expand your portfolio is key to building long-term wealth. Diversifying your investments across different types of properties and markets can reduce risk and increase potential returns. Strategies for scaling include reinvesting profits into new properties, leveraging existing equity, or partnering with other investors. Maintaining a balanced approach, focusing on both cash flow and appreciation potential, can sustain your growth over time. Remember, successful scaling involves careful planning and continued education in real estate markets and investment strategies. Even seasoned investors can make mistakes. Common pitfalls for beginners include neglecting due diligence, underestimating costs, and letting emotions drive decisions. Being aware of these can help you avoid costly errors. Educating yourself, seeking advice from experienced investors, and maintaining a disciplined investment approach can safeguard against these mistakes. Remember, each mistake is a learning opportunity. Embracing this mindset can help you grow and succeed in real estate investing. Staying informed about the latest trends and innovations in real estate can provide you with a competitive edge. Emerging technologies such as AI and blockchain are transforming the industry, making processes more efficient and transparent. Additionally, demographic shifts and changes in work patterns, such as the rise of remote work, are affecting demand for certain types of properties. Preparing for these changes by staying adaptable and informed can help you make smarter investment decisions and capitalize on new opportunities. In conclusion, real estate investing offers a promising path to wealth creation. By understanding the fundamentals, carefully planning your strategy, and staying informed about the market and trends, you can build a successful and sustainable real estate portfolio. Whether you're looking to secure your financial future, generate passive income, or simply diversify your investments, real estate provides ample opportunities for savvy investors. It seems there's been a misunderstanding.